Hey there, hope you're doing well. If you're a day trader, or even if you're not a day trader, but is actually investing in the stock market, you might agree that the last few days have been nothing short of, exhilarating, if that's the right word. There has been no dearth of action, if you will. So I want to talk a little bit about that, and maybe if you are trading, this could help you. But before I get started, here is the investment disclaimer. I'm not a licensed financial advisor. This video is purely for entertainment purposes. You're trading at your own risk, and when you trade, you're at the risk of losing all of your investment, or sometimes even more than your investment. If you have serious questions about investing, you should talk to a licensed advisor. I'm certainly not one of them, and this video again is for entertainment purposes only. Now that we've gotten the disclaimer out of the way, let's get started to talk about something more interesting. So, I'm going to be talking about this from the perspective of probably a day trader to some extent, because that's one of the things that we actually do. Some of us at Snowpal. That's not our core business, obviously. We are a software company, build products. Uh, but we try to, as we build products and solutions, we don't try to be creative about the problems. We only try to solve problems that we actually run into ourselves. And then we start to build a solution. So, we recognize a problem, we identify it, and then we build solutions for those problems. And how do we get to those, problems and by not having to manufacture them? Is by actually doing a number of different things in life and stumbling into those issues. That's a bit of a digression, but that's hopefully gives you some context. So the last few days, let's talk about that. With all the discussions, about that there's going to be a tariff or there's not going to be a tariff, or what are the types of products that are going to be subject to tariff, either it's Canada or Mexico or China, that's products coming from one of these countries, that's one of the reasons, but not the only reason. And then clearly there's been a lot of action on the Tesla security as well, given everything that Musk is or is not doing at Doge. So this is clearly not a political video. I could be the furthest, last person to talk to when it comes to politics. I mean, it is interesting, but I have no expertise. I don't claim to know anything about it. But I want to talk about, just the market and share a couple of thoughts, at least things that we do, and maybe it helps you, maybe it doesn't. So, we've published a few courses on related topics, and we're going to be publishing more courses related to this. But here, I want to talk about one thing specifically, right? So, the main difference between a day trader and a long term investor, or an investor, whether it's long term or short term, at least one of the main differences is a day trader tries to close their positions by the end of the day, for the most part. But if you're short, and again, I don't live too far from an airport, so excuse all of this noise. I could have done this video from home, like we do almost all of our videos or from our office, but it's the weather is just too good. It's 60 some degrees. It's beautiful, as you can tell probably, right? Sun is shining. It didn't make sense to be at home doing this recording. So my apologies for the wind noise and for the plane noise and whatnot. Okay, so the main difference, back to it, the difference between one of the main differences between a day trader and an investor is the longevity of your positions, right? Or how long you're going to, the duration, not the longevity. I think duration is a better word. The duration of your holdings. So if you want to keep it for a month, 6 months, or 12 months, or 18 months, or indefinitely, then you're an investor. But if you're just trying to close your positions on a daily basis for the most part, then you're a day trader. But regardless, the approach that you take is going to be quite different depending on whether or not you're a day trader or whether you're a day trader or a long-term investor. But the days that when there is a lot of action, for lack of a better term, uh, it does impact both the investors and the day traders. But it doesn't, tend to impact day traders a whole lot more because you're obligated to closing your positions. Otherwise, you're going to be subject to a house call or a margin call or one of those types of things, and you have to sort of scramble to cover your, if you're shorting, you have to cover, but you find money to pay your brokerages. So you reduce your margin or you have to liquidate your positions, right? So you don't have as much leverage as an investor does in that sense. So how do you deal with, if you are a day trader and you're subject to these days, and you are going to be, and it's a double edged sword, to be honest with you. On one side, you're like, hey, you want a reasonably stable market where things are not changing a whole lot, so it's predictable. That's a difficult word to use in the context of investments and trading, but for what it's worth. you want for things to be as predictable as possible, so there's not a whole lot of fluctuation. So things are, you're less anxious about it. But the downside, that's the upside, like if you want it there. But the downside of such a market is things are not going to change a whole lot. And as a day trader, you're probably not going to benefit as much, not necessarily, because you have to change your trading strategies, if you will. So you want action and you don't want action, right? You kind of want it at the same time, and this is just how life works, right? So, but if you're, let's say, day trading in these volatile, highly volatile days, here's one of the ways we've kind of resorted to doing it. And as to whether it works or not, it depends on the individual really, and what your strategies are. So all of this, we're just sharing our experiences with you. Like, take it with a grain of salt and treat it as entertainment, like I've said 2 times already. Um, so let's say the day starts at 9:30 in the morning, right? Typical trading day, the market opens at 9:30 Eastern time, and it closes at 4 p.m. Eastern time. So you have 6.5 hours of trading time available to you. Now, even if you're a day trader, you can actually you can treat the day as a year. And here's what I mean by that. A year typically has 250 trading days. So if you're an investor who's trading, let's say you're trying to hold your positions for about a year, you're going to treat that as the window of time available to you, right? 250 days of 250 trading sessions, treating each day as a single session. Now, if you took one session as a day trader and you have 6.5 hours, you can break that into 13 sessions. Here's what I mean by that. 9:30 to 4 o'clock, sorry, is 6.5 hours. So if you take a half-hour window as a session, you have 13 sessions available to you. Starting 9:30 to 10 is one session, 10 to 10:30 is the second one, 10:30 to 11 is the third one, and so on and so forth. Then by the time you end your day at 4, you've gone through 13 sessions. You have to treat that as though it's you're a long-term investor during the course of that day, and try to break those sessions, break the day down into those sessions, and then you break those sessions down further. But before we get to breaking those sessions down further, at the highest level, you have one day and 13 sessions. And if you treated yourself, pretended to be a long-term investor during the course of that day, you want to treat the first 6 sessions or so as the first part of the year. Like 13 is an odd number, so it's hard to divide it by year. But let's say three multiples of 3, you get 12 plus an extra session. So let's say the first or the last session is 5. Sorry, let me step back. So you have 13 sessions, right? And if you want to split it by year, I was just taking 12 months essentially. If you ignore the 13th session just momentarily and treated it as though it's 12 sessions for the purposes of ease of conversation, you can say that each session is a month, right? So there's 12 months in a year, and there's like 12 sessions in that day. There's 13, but let's just split in it's 12 for the rest of this conversation because it makes the math much easier. So every session is a month, and then when you go to the next session, it's the second month. So you have to pretend like what 9:30 to 10 is January, 10 to 10:30 is like February. How do I do dollar cost averaging during the course of this day across these 12 sessions, so I can actually recover from a bad trade that I've entered into, or monetize more or expand upon a nicer trade that I may have gotten into, right? So that's I think it's important to do that. At least it's one way to approach the problem, because if you don't do that, you're going to kind of feel a lot more anxious than you might need to be. Again, a lot of trading comes down to discipline, managing money, your risks, asking yourself how risk averse you are, or how much risk you're willing to take, because a lot of that goes into the activity of trading. There's no silver bullet, right? It's not like you read a book and you're like, hey, somebody X is doing this, so I might just copy this or shadow that person. I mean, maybe that approach works for a lot of people. Maybe the person you're shadowing is someone like Warren Buffett, and you have exclusive access to all of the thought processes of somebody like that. But if not, for the rest of us, for most of us, it's not easy enough. I mean, it is not even a fruitful model, at least for the most part, from what I've seen. So you have to rely on your attitude, your personality, your hunches, and your ability to take risks or not take them, and to the extent you're able to do all of those things before you decide how to go about it. I'll share a diagram that I drew up. It's just a simple one, I think fancy, but it essentially breaks the day down into the sessions we talk about. This way, what happens is you could say, you know what, the first 6 sessions are one half of the year. And if things don't go well, either I sit out the rest of the year, which means there are other 6 sessions, and I'll start the next trading day, or I come up with a different strategy. Things may have changed during the course of the day, but as you've seen the market, on days where there's a lot of action, it could, the pre-market is no reflection of the market. And then the post-market, after hours actually is no indication either. You get a sense from the futures as to which direction things could potentially be leading. But I've seen that it's more than often that you could see the futures being down in the morning, and then when the market opens in the 2 minutes, it's in the other direction, it's green, or vice versa. So a lot of them, again, it's just like they say, right? We're not God, and we don't have nobody has the crystal ball to be able to time the market. So you do to the best of your abilities, which means discipline plays a big role. So breaking your day down into these 12 sessions will actually help you, and then you can document it, make notes, and however it works for you. There aren't great tools to doing a lot of what I'm suggesting here, not yet. More on that later, but I don't think we have the tools that we should potentially be having, or we could be having. So more than right now I looked up that there's like roughly about 9% of the US of Americans in the US actually are directly investing in the stock market. Only 9%. Right, 91% of the market is from what I read, apparently is controlled by 9% of Americans. That's an incredibly disproportionate number. And when you're doing this, whether regularly or infrequently, you know why that's the case, because it's not. Nothing is easy in life, but this is very, very difficult as well. It'll test your mettle in all facets of your personality and whatnot. So applying discipline is important, but to have those disciplines, you need to have some rules that you have to create for yourself. These are house rules that you create. Just like when you're playing a game, you have these house rules. You need to have house rules that work for you. The rules that you can see and read online may or may not work. So even when you're listening to a video or a podcast or whatnot, and you're reading up, you want to put that to test by doing these paper trades, so you're not losing real money. Once you have confidence in yourself and your trading abilities, and you feel like you want to test the waters for real, then you might want to switch. You may want to switch those paper trades to real trades. But there's different ways in which you could potentially do that, and that's for a different video altogether. But going back to the one thing I've been trying to impress upon this entire video, which is break those sessions down. It doesn't have to be half-hour sessions. You could do 1 hour sessions and within the day, and it's 6 sessions, right? And you have 6 sessions, and say 3 at the top of the day and 3 in the latter part of the day. And you're like, you know what? I'm going to trade a certain way in the first 3 sessions, and if things go well, I'll continue that pattern towards the rest for the other 3 sessions. Or if things go south, I'm going to change it. Right? Either I'm going to sit out, or I'm going to change my approach. Maybe I was buying at the top of the day, and the market seemed to be going the opposite direction, so I decided to short the other half of the day, or again the vice versa, right? You started the day shorting because the futures were negative and things look negative, and then the market's turning green and there's positive news. Maybe the tariffs are going away or are being reduced, or maybe the number of items that are being subject to tariff. Again, I take tariff an example simply because it's just been in the news lately. But you can substitute that with anything else that's happening at any given point of time. So that's basically what I wanted to share. Hopefully you've learned one thing. My hope, our hope when we share these podcasts and content and whatnot is that it's hard to tell. Everybody has a different level that they are currently at in whatever it is, whether we're talking software, we're talking development, whether we're talking AI, whether we're talking technologies, whether we're talking stocks or finance, or just any topic in general. So we try to be reasonably high level, but sometimes you go deep enough as well. There's no real pattern per se, but the hope is that you've spent the 10 minutes or 5 minutes or 15 minutes, and you've gotten something of some value out of this. At least that's my hope. Again, check out our products. Go to products.snowpal.com. We have a suite of products and services, and you're going to find something that you could benefit from by collaborating or working with us. Talk soon. Bye-bye.